we are talking about the real estate market and REITs momentum. So I'd just like to ask our panel to just introduce themselves. So I'll start at the far end with Somaya.
Habari is what we say, right? Good morning, everyone. My name is Somaya Joshua. I'm from ABSA Bank. I lead the real estate finance team outside of South Africa for our bank.
Yeah, good afternoon. My name is Kariuki. I'm the CEO at Mi Vida Homes and the Gardens Development. Thank you.
Good afternoon, everyone. My name is Steve Mallowah. I'm a partner in the law firm OK Law.
Good morning, everyone. My name is Brenda Kithinji. I'm part of the investment banking team at Stanbic Bank, based here in Kenya, focused on real estate finance. Thanks.
Morning, everybody, or afternoon. Mark Dunford, the CEO of Knight Frank here in Kenya.
Great. So the first question we're going to ask the panel is, there is such a natural interest and curiosity regarding real estate and owning property in Kenya. How can it be harnessed to grow the REIT sector? Maybe we can start with you, Mark.
Sure. I think it's leading on from my question that I asked just now to Green Street. I think there's so many layers to what Kenyans view as owning property. So we obviously have the commercial side, the institutional side of real estate ownership and development, and that has kind of been the focus of a lot of what I've been listening to. And obviously it's typically the larger quantums, but I think there's also an element that we haven't explored yet regarding the private investment side of things and accessing what we have here in Kenya, of a growing middle class, and across many markets in sub-Sahara we have this growing middle class who are looking for ways to invest in high-yielding products, vehicles, and one of those could potentially be REITs, which isn't yet something that's happened. We've been talking about REITs here for quite a while in Kenya, and for a few reasons I'm regularly asked why it's taking so long for REITs to take off, and they are starting to take off. It is a slow burn, and a big part of that is the education around investing in REITs and also the access to invest in these REITs. On the flip side, when you look at the case studies of India and Mexico that we were just shown, these are markets which have large number of investment grade assets, international appetite is interested in the type of assets that we're talking about in those markets, whereas here in Kenya we don't actually have that many assets that tick the boxes for large institutional investors from all around the world. So I think accessing that kind of, like you said in your question, that mentality of we want to own real estate as Kenyans, not all of us can necessarily afford to buy commercial real estate or even residential real estate affordably. Perhaps there's an avenue there that hasn't been explored around, what certainly hasn't been explored thoroughly yet, around the investment platforms that would allow individuals to invest in structures like REITs.
Great, thank you, Mark. Brenda, over to you.
Sure. I think just following on from what Mark said, and maybe, I guess, Kiprono and Ed are not here. I think they mentioned that we are picking people who really want to just own a piece of land to be buried in and so on and so forth. And I think that's sort of the older generation thinking. So I just wanted to encourage them, the younger people, we're not in that space anymore. We don't want this chokehold. So I think the demographic that we have, 75% of population below 35 years, that demographic, doesn't want to be tied down anymore. And I think it then serves to having these financial instruments, or rather, turning physical assets into financial instruments key, and I think this is the right time for it. And then I think just what Mark said, providing that platform and distribution of then now these financial assets in a way that's easy for people to access, for people to trade, providing that education and awareness. And I think it'll then now be attractive, and you'll be able to harness, I think what Edward said, $120 billion locked in Nairobi Metropolitan in terms of owning real estate. That's not necessary, and I think that investor education and providing just the right product and the right platforms will be able to sort of unlock that capital into real estate.
Great, thank you so much, Stephen.
Yeah, thanks. Okay, well, speaking as a lawyer, I always, I always try and sort of not get too pessimistic. So as I grow older, I'm becoming an optimist. When you look at the statistics about the number of people who are participating in the capital markets, and we're just talking about ownership of stock, right? The numbers are quite low. And I think there's a conversation to be had around what do Kenyans think or believe investing is. And I suppose it explains the sort of love for property because it's tangible, you can see it, you can touch it, you can be buried, on it. And so the conversation has to be about how do you change Kenyans' mindsets into believing that these financial assets are as good, if not better, than these physical assets that they hold so dear. So I think there's a lot to be done in terms of education to change mindsets. I think there are huge opportunities. I'm sure there are many Kenyans who would like to own a piece of a hotel or a piece of a shopping mall or whatever it is. So I think public education, investor education is probably key to driving the REITs agenda.
Yeah, thanks. I agree with my fellow panelists. I think if you look at different property categories, one can then see how do they render themselves to that question. To what extent can REITs play a part, whether on the supply side or the demand side? And I suppose the more institutional property classes, retail, commercial, industrial, data center maybe, are probably easier discussion. It's it's going to be a business on the development side, an institutional business on the demand side. But I've been thinking about this other interesting segment called housing, where you have an irony of every research, everybody here concurring that we have this very deep demand on one side, but neither the developers supplying sufficient for whatever reasons, but also on the demand side, we don't have, other than in a very limited way, institutionalized offtake mechanism. And I guess then the challenge for us in RAK, the challenge for us in the wider industry, is how can we bring those two together, the demand side from a REIT perspective, which, if that is resolved, potentially allows REITs to play a bit on the development side. I think we've recently seen some institutional transactions on the offtake side or on the demand side, which validate that indeed there is a market there. The question is, are we creative enough to bring together products that enhance what it is that we are seeing? I think a typical household in Kenya thinks of property in terms of a home. Challenge in the morning by Edward, to what extent do we start seeing real estate from physical assets to financial instruments? And I want to go broader than that and say, of course, granted it will take a while before Kenyan households or Kenyan individuals move away from wanting to see a physical asset as a real estate or financial instrument, but it's still possible to come up with instruments that marry the two. And I want to suggest one, just for this conference to go home with. Tenant purchase schemes have been, have been quite successful for the few institutions that have ventured out into tenant purchase schemes. But the issue for developers have been, how do you? I can't hold a long-dated debt book, but there has been proven retail demand for those. How can we then, as a REIT association, develop products that could offtake that? And I give that as an example to show, with some creativity that addresses either especially the demand side of the various segments of property, and especially the homes, the housing side. It's possible then to take advantage of this whole momentum and bring REITs to bear. Obviously, we are at the moment playing significantly below what we should be doing. There isn't much, if any, even at discussion level, REITs discussion in the housing agenda, which is a key agenda in the country at the moment. And I suppose the challenge for us today, and for the association, is then to be able to answer that question. There is rental demand, The tenants are not necessarily investors in REITs. There are people who buy units, and they buy not because they buy because they want to see the assets. And there are people who, well-structured REITs that speak or that underlie that sort of demand are brought to the market, potentially could invest. So a bit of innovation into what products that are REITs linked and that also linked to this demand can come to the market.
Thank you. Somaya, over to you.
It's always hard to speak in a panel of such esteemed speakers. I better try to not be boring and also not be too repetitive. But maybe I'll tell you a bit of a story. I'm not Kenyan. I'm quasi-Kenyan because I love the food here. But I was traveling to this conference event with my team, and my regional head, Zara, was talking about Kenyans' love for owning property and why that is. And, when you think about the culture, the tough stuff that needs to happen is actually we need the paradigm shift. And now you need to think about, so how do I convince somebody that is looking at buying this piece of land as a way to create wealth, as a way to create almost generational wealth and pass it down? It's tangible. When you think about a REIT, it's a financial instrument. You can't take your kids past and say, this is what it is that you're going to get. But what you can do is start to sell the financial story around why this is probably a better alternate than the actual asset. And the easiest answer for human beings is just the cost of entry. So when you're buying into these vehicles, suddenly you're getting a lot more benefit from a price point perspective. Suddenly you're getting into an asset class that by all means is not liquid. But the REIT structure allows you to have that liquidity. So you can trade in and you can trade out of the structure. And it comes down to how it is that we're educating our market. And listening this morning, when you corporatize a structure, you're talking about the graphics, you're talking about the financial story that potentially the yous and me's in the room doesn't understand. But what we do understand is passive income. What we are seeing in Kenya is there is an investor market starting to develop here. People are buying units for rental income. The commercial argument to make is to say, well, actually, when you're buying into the vehicle, suddenly you don't have to manage your own rental collections. You don't have to manage your operating income lines. The fund does that for you. The passive benefit to that is you sit back and you're earning a return. And I think that there is the 4 REITs that are fairly new need to start to have the conversation with the market around awareness, financial benefit, cheaper ways to get into real estate, to participate, and what it means to then transfer wealth through a financial instrument rather than a tangible piece of land or tangible unit.
Thank you so much. And I think just to summarize from the panel, I think what I got from that is that we need to look at platforms that allow access for investors in an easy way. Basically a focus on investor education, what the REIT does, how you can actually convert physical assets into financial assets, also storytelling around the benefits of such assets, and then lastly, looking at REITs as a potential offtake demand mechanism for the housing sector. So thank you very much. Our next question is, looking ahead, what are the anticipated opportunities that can further accelerate the momentum of REITs in the real estate sector, and what steps should industry leaders and policymakers take to sustain this growth? Mark, maybe.
Sure.
Thanks.
We'll keep the same order. I'll just go back a little bit on what some of my colleagues were talking about. I hear the need for a cultural shift from the owning a tangible piece of land where you can get buried, but at the same time, we as Kenyans are very adaptable and we move quite fast. If you think about how quickly things like M-Pesa off and how many people invest in bonds, for example. So, we're not alien to investing in intangible assets or understanding that, things can be commoditized. So I don't think it's a massive cultural shift for us, particularly the newer generation. I get it from a baby boom generation perspective, but I think otherwise I think that's an opportunity. So there you go. It transitions quite well. I think also from an opportunity perspective, you know, and I sound a little bit cynical, I appreciate that, in my earlier point about, you know, there not being a portfolio of assets in this market that would necessarily be attractive to global investors. And I say that having spent a very long time trying to attract global money to come and invest in sub-Saharan Africa. And the issue being, yes, we like that shopping mall there, or we like that industrial facility there, or that office building in that market, but you know, we don't want to fly all the way in from North America or the Middle East or even Asia Pacific and own 30 assets across the continent look pretty much the same and form a nice portfolio and a neat package and yield forex. And there just isn't that platform, at least a nicely packaged version of that platform yet. But you know, that's thinking about large global capital. There is home local capital. Again, part of the reason I was asking the questions I was asking in the earlier session. And there's also sort of secondary market capital that looks at Africa or would look at Africa, again, for the same reasons that primary market capital looks at Africa. So if we were to look at the Middle East to an extent, not necessarily the vanilla markets that we typically think of, and places like the subcontinent of Asia and other African markets, more developed African markets, and I guess that's part of the reason why the South African banks are so well represented here today. You know, there's opportunities in sub-Saharan Africa that secondary market capital will look at and come in and invest in that doesn't necessarily need to be as big and shiny as the stuff that the primary source of funds in the big global markets are looking for. And you know, we need to bear in mind that we're competing. If we're looking for global money, we're competing with a global market. These people can invest anywhere in the world. Why would they specifically come and invest in? It's a much bigger than if we're saying we want to attract, you know, that sort of second tier investor rather than the big shiny principles that we always hear of and all the big names that we talk about. So I think aside from the opportunity in commoditizing to your individual consumer market, which is growing here, and you know, the low threshold for investing in REITs now just opens that up so wide. There's also this opportunity, I think, to look for more local money or regional money rather than focusing entirely on EIF or ICD or Brookfield or whoever it is to come in and invest in this market. Instead, go and look at for, you know, people in Egypt or India.
Great, thank you so much. Brenda?
Thanks. Mark, I think you picked at my book because those are all the answers I wanted to give. So
I'm sitting right next to you.
No, I think you sort of covered it. And I think just what was said earlier in terms of demographics, there's a huge demand for real estate assets. It's across asset classes, so there's a huge demand for residential, for industrial, for data centers, and I think that presents a really large opportunity in terms of how we're going to mobilize the capital to sort of then develop these assets. And this is a big opportunity that REITs has. Or that lends itself to the REITs market. Real estate is long dated. You need long-term permanent capital, recyclable capital. You have a large pipeline of assets that you need to develop, and so this is a large opportunity for investors. And I think we've seen a lot of private equity funds and just investors struggling to exit real estate assets when they've wanted to exit the assets, and so you're having people now think of, and we've had a lot of private equity funds that were real estate focused come to us and ask how can we exit these assets, and really a lot of them the answer has just been the REITs. So then that provides also another opportunity for the REITs market to sort of provide that extraction of value in the market. And I think further, or in addition to that, then institutional investors become really important, and even before we sort of mobilize global capital at home, and pension funds, insurance companies, and other large institutional funds or companies that hold capital, it becomes important for you to sort of prove the market for the global players and even for the retail players. I think if they see continued support for the REITs, continued investment of portfolios into these asset classes, then you provide market confidence that this is something that can work, it's profitable, it's generating positive return and alpha, on a consistent basis. Then you will give sort of confidence to global markets, to other funds outside of the country to come in and put in the capital, and you'll also give confidence to investors to come in and put in capital. So I think there's a role to be played by institutional and enabling environment from policymakers, sort of stable markets, so that even when we have money coming in or we are able to get from our global investors, then they have a stable market where they're not worried, they're coming in dollars. A lot of the assets are also, local currency denominated, that get that of their return. So providing that stable environment is also important. Yeah, thanks.
Thank you, Brenda. Over to you, Stephen.
Right. So in terms of what we see forward, first of all, I must say that we're privileged enough to have advised on 3 of the 4 REITs currently in this market, and so because of that, we have a constant stream of people basically coming in and asking, what's this about? Can we set up? And so there is a pipeline, and first of all, kudos to people like Acorn, because they sort of paved the way. And with every transaction, what has happened is that it's first of all proof of concept that the regulations work, and we also know what doesn't work. And the regulator has been very, very proactive, accommodating, in being flexible about the rules. So clearly the path has been set. So there are interesting issuers coming down the road, at least 3 I know in the pipeline. The only challenge that we need to really unlock is the issue of the stamp duty exemption, the transfers into REITs, because that holds back. There are certain people who would really want to streamline their property portfolios, put them into REIT structures for liquidity and other capital management purposes. So stamp duty is a huge one, I think. If we can unlock that particular issue, then clearly we're going to see a significant number of REITs coming to market. 2 other specific things that we see on the horizon. Climate change, green building, the REITs are actually driving that agenda of actually developing much cleaner real estate assets, greener assets, energy efficient assets. And that's also being driven by financiers, providing green capital. So that's going to be a major issue going forward. Affordable housing. Now, I think I saw Tom Mallowah somewhere in the room, and probably he's going to speak to the issue of the government's initiatives on affordable housing. I don't know enough about it to speak authoritatively, but definitely the government is looking to REITs as a way of very quickly addressing the housing challenges that we face. So I think that's probably, that's what I see in the horizon.
And perhaps to your point, RAK chair should always ensure KRA is invited to these forums. We shouldn't take it for granted that they fully understand REITs or their roles in it. I think when we talk of looking forward, I would use the word I'm cautiously optimistic on REITs. I think the last 10 years have seen a lot of institutionalization. The real estate sector, regardless of the segment, is developing in a positive trajectory, a lot of institutionalization, a number of institutional players across segments, and importantly, in my case, in housing. And that is, in my view, laying a positive foundation, for future REITs. Should probably be, and I've debated with this. Today, if you talk to developers, the larger developers, how many of them would say they have plans in the next 5 years or so to promote a D-REIT or an I-REIT. Or if today you have institutional owners of property, holding property looking to exit, how many of them are looking at I-REITs as a primary exit mechanism? And if the answer for that is not many, I suppose we should then be able to answer the question, or looking to answer the question, why? As a developer, I don't mind REITs. I would say I would primarily focus on raising capital through D-REITs. And if I try to answer the question of the why, is the fear that based on what we've seen in the past, it may not be successful. And that then makes it, probably discourages potential developers such as ourselves from venturing into an unknown world. It does help that, the likes of Aecon have come and proven that with a specialized product, that indeed, it can be a successful mechanism of fundraising. I think if you look at the latest numbers from the various REITs, we are seeing some resilience in operating income. So I think generally, it does give the picture of a very positive, medium-term to long-term outlook. I think the challenge then is to either property owners or for us as developers to be bold enough. If you're saying that there's a future in REITs, to be bold enough to come to market. Work with RAK, work with whoever else we need to work with, and bring projects to market. At the end of the day, a REIT has to have some underlying development, and that development has to be sponsored by a developer. The challenge is for us to be bold enough, conceptualize projects, de-risk projects, prepare them for institutional investment, and launch them in the market. Yeah.
Thank you, sir. Over to you, Somaya.
Look good. That's the first principle. Look good, be transparent. ABSA funded Aecon's D-REIT. We put 6.7 billion shillings into that structure towards the end of last year. It is a specialized fund, and so I don't want to sound like I've got a double standard with what I'm about to say. This is Africa. What works well is diversified REITs. And whilst Aecon is still specialized, there is a place for specialization as you are emerging. But my intuition is, what is Aecon's next? It's going to be the students that are now the graduates that are going to be looking for middle-income housing. That is the easiest diversification strategy. Diversify. Close your eyes and imagine if we believed the first world argument. Raghav said we can drop bombs, so here's my bomb. If we believe the first world argument that specialization is the answer, close your eyes and imagine a REIT that was fully invested in hotels, and COVID happened. The cash flow goes to zero. What diversification allows you to do is to ride the cycle out. As one asset class starts to take some pressure, suddenly you see another asset class that starts to emerge. And so there's a big place for diversification. Geographical diversification, subsector diversification, asset class diversification. So that's the first point. Look good, and make sure that you are always paying attention to the fundamentals. The biggest positive on a REIT structure is you've got a layer of corporate governance that is credible. It makes the argument for sustainable cash flows a lot more believable. And that's the thing that I do believe will start to attract a lot more investment. And then the obvious one, like my panelists have shared, is start to think about ESG. We are talking about attracting capital. You're starting to see a lot of impact funds raising their hand and saying, we are sitting on dry powder. We don't know where to go, but we want to do this responsibly. And the place the capital will flow to is to the ESG assets. And then the last thing is these structures work with scale. So we are an emerging economy. We need to build the scale. Think about how you scale up, because REIT structures do need scale. but they need investment-grade assets. And that goes back to the story about fundamentals. And on the secondary market, one thing that Africa struggles with generally, which is why, again, my argument is counter to my colleague's argument, we don't sell assets on our continent, right? There is a very anemic secondary market. So part of the fundamentals is also, let's start proving our valuations. And the way to prove the valuations is get the secondary market to start showing a level of activity. And we've already got some low-hanging fruits in the private equity funds that are looking for exits. Prove the valuation, and hopefully that starts to shorten the gap between market cap and NAV, where we are seeing a big distortion between valuation and actually how the market is valuing these funds. The easy way to prove that is to sell an asset. Willing buyer, willing seller, to prove that the value that you believe actually does exist.